Wanted to make a video, wanted to jump on live and make a video for you guys today about an article I read in the Wall Street Journal about the commercial real estate growing crisis. Article was, I think, from a couple days ago, actually. I think it was April 29th or 30th, but I read it today. And so, just wanted to hop on here and discuss it a little bit with you guys. There's all kinds of things I could be talking about. I mean, just got to go into my Twitter feed and it's just like one tweet after another, just one disastrous development, sort of under the radar disastrous. I don't mean something you're going to see on like NBC Nightly News where you're not going to hear anything until the entire thing is burned down. But economically speaking, but for the people I follow on Twitter, people are really clued in or watching like Fed data, Treasury auctions, inflation data, manufacturing indices, all that kind of stuff. I mean, it's just one ugly development after another. And it's just, this is the stuff that kind of accumulates over time, and eventually, the total aggregate weight of it all produces a collapse, right? So there's so many things I could be talking about. But in the limited time, let me talk about this article I read that was discussing the whole situation with commercial real estate. I think the interesting thing was the article was highlighting, I'm going to be doing some serious paraphrasing here, guys. I read the article one time several hours ago. But the article was kind of paraphrasing some of the stressors in the CRE market. And it kept kind of citing this one figure of like 38 or 39 billion dollars of distressed loans. And it was really like harping on how this could be a really bad thing. And I'm sitting there, I'm like, 38 or 39 billion, like whatever the number was, let's go with 39. Okay, $39 billion, like the commercial real estate mortgage maturity market is like 3 trillion. And that's between last year, like all the ones from last year up to 2028. So, that's, and of course that's for several years, but that's still going to be on an average annual basis, way more than 39 billion. Okay. And, so then I couldn't tell, was it talking about just these pure loans that were taken out, or it kept using, the terminology mortgage-backed securities. I was like, maybe it's talking about like a subset of the entire loan output, right? So that could be why there was a discrepancy in what I expected numbers wise. But let's just harp on it for a second, right? Like if there's a real fear, $9 billion of these maturing and distressed mortgages, mortgage-backed securities for commercial real estate, then what is the entirety of the 3 trillion? Not to say every dollar of that 3 trillion is distressed, but just, I mean, that's 100x what we're talking about, right? I mean, give or take, right? That's 100 times bigger. And yet we're looking at this 39 billion with such a strained eye. And I'm like, and this is not even taking into account, like, and again, I'm no expert, guys, but this is even like, not even taking into account derivative investments on these mortgages, like the multiplicative effect of people betting from the outside looking in on these mortgages, like guessing that they're going to go down, or betting they're going to implode or whatever. And I don't know what that derivative market is for commercial real estate properties. I don't know how extensive it is. I don't know how voluminous it is. I don't know how small it is. I just have to divine the fact that when you use 2008 as a template, we know that there's a derivative market on mortgages, right? That's what happened with subprime and the housing market in general, is there were these derivative investments on those loans that when those loans went bad, the derivatives became collateral damage. They became these second order effect type of disasters that just reverberated through the market, just seized up the whole system. We know that there's been no change to that. We know that system fundamentally is the same. I don't care about Dodd-Frank in 2010. I don't care about any of these other, facade-like bills that got passed. I mean, there's still such a thing as derivatives. There's still a healthy, if not overly robust derivatives market to the tune of 624 trillion the last time I checked the usdebtclock.org website. And so, not saying every dollar of that is on these commercial real estate loans, but there's got to be some percentage that is. I just, non-expert, just following this from afar, gut feeling tells me that some percentage of that 600 trillion is attached to this growing commercial real estate issue. Okay, so, and one of the things, I think I posted it, I can't remember exactly where I posted it, if it was maybe just on Facebook and Twitter, at least one social media platform, guys. I posted a picture, I think it was a picture, not the actual web link, but a picture from a website for a short real estate ETF. And I think it was DRV or SRS. I mean, I own SRS and I bought it a couple weeks ago. But I can't remember which one it was. It was like DRV or SRS. And I snapshotted it, and it showed or discussed the fact that there were X percentage of derivative investments, within this portfolio on commercial real estate or on real estate in general. It was something to that effect. Kind of wish I looked at it before I jumped on this live, guys, but you can find it if you scroll through the feed, go to Twitter, Facebook, whatever. It's in there somewhere, and I'll probably try to look for it again after this video. So when you read this article in the Wall Street Journal, again from earlier this week, I believe, and they're talking about the problem that'll be caused by this $39 billion in distressed loans on mortgage-backed securities for commercial, and you realize that the scale of investment here goes way beyond $39 billion, way beyond it. And then you throw the derivative issue on top of it. I don't think this article even mentioned derivatives. Now that I'm talking through it with you guys, I don't think it even mentioned derivatives. I don't think the word appeared in the article. It's like it just focused on the fact that there was $39 billion of distressed mortgages, period. You know what I mean? So this is something, guys, that I think I just have this eerie feeling that the scale of it is not properly comprehended at the surface level. And when I say surface level, I mean anybody consuming, mainstream reports about this. If you're not really digging into the details and know what you're looking at, because I frankly don't know what I'm looking at. I just see stuff that's reminiscent of 2008, gives me enough of a sense of like connecting the dots. But if you really know what to look for, you're probably way ahead of where I am understanding-wise on this, in terms of realizing how bad this really could be if all this is sort of like, comes to fruition the way that it could. So, the distressed loans, the scale of the market, the derivative scale on top of that scale. I mean, look at that. I mean, look at the order of magnitude scale-wise in the derivatives market. And I mean derivatives overall, not just commercial, compared to the commercial loan. I mean, $3 trillion in commercial real estate loans, $620 trillion in derivatives. So, just staggering orders of magnitude difference here, guys, that we're going to have to kind of contemplate at some point. So I'm going to just keep harping on this, guys. I mean, I know it's probably become the topic du jour for me because I think it's just, that and inflation, starting to really kind of poke their heads out of the trench line. And I just see the vice getting squeezed closer and closer. It's just not going to be good. It's just going to be so ugly, guys. So I hope everybody's kind of tracking, dialed in on this stuff, and realizing what's going on with it. It just looks really, really bad. So would love to hear what you guys think about it. Drop a comment, drop a question below. Would love to check in with you guys about it and see what your thoughts are on it. So hope everybody has a great Thursday night and a great weekend, and we'll talk to you guys soon.